Colin, in the U.S., when we see a distinction between the economic reality and the actual stock market, we blame the Fed. What's the reason for it in South Africa?
Well, I think you've got some technical factors, but it's a tale of two stories. Effectively, the local market, the Johannesburg Stock Exchange, is a mix of heavy global mining names, Naspers and some others like BAT, that dominate the local equity exchange, that effectively are tracking global factors that you've touched on, including high commodity prices, confidence in China, a resurgence in the United States on the back of the vaccine, whilst in the local market, as David Malpass touched on, the second wave is being devastating here, and the rate of deaths has gone up significantly in infections, and the combination of other local factors like load shedding are not being resolved. So we have a number of very concerning local factors that combine that mean that you shouldn't look at the equity market really for guidance on what is happening in the local economy. Even then, there is quite a bullish view on GDP growth. I think the Bloomberg consensus outlook for 2021 is 3.8%. I don't know, Goldman Sachs's forecast is 5% for 2021. It sounds pretty bullish to me because of these local factors that I think are going to be very, very challenging for the South African economy in this year.
Colin, it's summer down there at the moment. In theory, this should be the easiest time to manage the virus. There is a variant in South Africa that is moving pretty quickly. How tough could it be? What are people saying down there about how tough it could be as we get into winter?
Well, hopefully the second wave will have worked its way out by then. I think, it's really a question whether there's a third wave in winter months. And the vaccine is the all-critical important issue. So the failure to effectively deliver vaccine product into South Africa is very, very concerning to me. I think it's one of the major factors, about whether we can get some portion of the population vaccinated in time for such an outcome in the winter. And as I say, the combination of those politically also, guys, very, very explosive, because you have, the ruling political party, divided. You have these factors like load shedding, and you have the rising anger around the COVID situation and inequality and racism as a background, or racial legacy as a background. And these things are quite explosive in terms of where South Africa could be headed in the next 12 months. So there's a very heavy burden on Cyril Ramaphosa to manage in the next 6 months before the third wave or the winter wave hits.
Shamaila, let's bring in you into this conversation, because Colin's talking about the vaccine story and how important it is for South Africa. If I look more broadly at the emerging market story, what I'm getting back, and a lot of reports I'm reading, seems to suggest that basically the vaccine narrative is going to be incredibly positive for emerging markets. There does seem to be an awful lot of good news priced in around vaccines and many parts of the world. Are we overdoing it?
Happy New Year to both of you. I do want to mention that we've been constructive on emerging market assets for a number of months because of the vaccine story. And yes, spreads have come in, but we do think there's more room for spreads to rally further, because the vaccine story is going to lead to a rebound in growth. You are going to have a low rate environment. Valuations in emerging markets are still pretty attractive relative to anything else you can buy, particularly in the high yield space. And the technicals are positive, with inflows expected to pick up in emerging market, as well as supply likely to be lower on a net basis in EM. All of these factors we think is not really leading to overdoing it, because there is more scope for outperformance for emerging market assets in 2021.
Shamaila, what does your dollar view have to be to support that view? I'm still trying to work out, what a blue Senate means for the dollar. I mean, you get more issuance, that could be dollar negative, but you get more growth, that's dollar positive. So I'm sure you have to take a view of that in order to inform where emerging markets still have the value.
Absolutely, and our view has been that the dollar is going to be structurally weaker in the medium term. The blue wave, we think, is actually going to emphasize that. So the factors that you mentioned, there are dueling factors, but the weaker dollar is likely to prevail. The fact that there will be, as a result of a blue wave, more stimulus, but possibly also infrastructure stimulus, is a real positive for emerging markets if it materializes.
Colin, what is your perspective on emerging markets? South Africa are obviously having a very tough time of things, but as you lift your kind of eyesight and look around the world, do you see a big opportunity here? A lot of people are starting to reposition reasonably aggressively into this space. A lot of people still see portfolios as being underweight. Excluding where you are right now, does that opportunity look real to you?
I think it does look real because global factors, which have been very negative for some time in 2020, look decidedly to be turning. With views on the United States, China, and the vaccine combining in a very positive way. So, from my banking background, I look at that and I think, that people are going to see a lot of opportunities for that positive global environment to feed local economies. I think the warnings are whether the vaccines actually go into these emerging market countries because, the emerging market countries tend not to have the manufacturing capacity. That's certainly the case in South Africa, and don't have the buying power or the leverage that the developed markets have. So our ability as an emerging market class to get the vaccine to the people in such a manner that these economies can actually reach the potential and trade through what is better global conditions, I think is a key factor. And then there are other factors where some of the emerging markets, I would say, for example, South Africa and Turkey, Brazil maybe, are less well positioned, and others are better positioned to take advantage. But it's better this way around than having a global environment that doesn't provide any breathing room or oxygen to the emerging markets. So I think there is upside.